In this video, we are going to look at why support and resistance is not working for many traders and how retail traders look at support and resistance versus how smart money and big banks look at support and resistance, and also how smart money views support and resistance lines as liquidity and how liquidity hunts are made on support and resistance lines. Also, how to draw support and resistance the proper way and a secret tip to how to draw support and resistance for high win rates. And once a breakout happens, you use the resistance zone. Once the breakout happens, you can see now this is another example in the daily chart. This is a breakout. Okay, so this is a 1 hour chart. Some sell entries can be made in these places. So these sell stops are going to be liquidity for big banks and smart money, which means when the sell stops triggers, what big banks and smart money will do now is, so this is known as smart money hunting for stop losses. So liquidity hunt or liquidity sweep. A support is a price point where price bounce from it. As you can see, the price is bouncing and having the likelihood of price not going below it. So when you draw this horizontal line, you consider it as a support line. So usually the price tends to respect support lines without breaking and going down below it. So retail traders buy at support. So retail traders believe that support lines will hold and they take buy entries, meaning they usually will try to enter into buy trades in these price points where the price is bouncing. A resistance is a price point where the price bounces from it and having the likelihood of the price not going up and above it. The price tends to respect the resistance line. As you can see, the price tend to respect, meaning it's not going above and beyond it, it's respecting without going above it. Okay, so then retail traders will sell at resistance. So the retail traders believe the resistance will hold and they take sell entries in these points over here where the price is bouncing. Okay, so now let's look at how support can be turned into resistance. What does that mean? So when the price breaks through a support line, so there are instances where chances where the price will break through a support line, break down, and in that case that support line can start to act as a resistance. So usually retail traders will start to sell after a breakout. So as you can see, some retail traders will start to sell over here once again because they think it's a breakout and they think now the price will go down. And in some cases that works. Okay, so let's see what's next. Okay, then resistance can be turned into support. So this, you can see the price is respecting the resistance over here, respecting. However, there can be instances where the price will break through a resistance lines. We call it as a breakout. And once a breakout happens, there is a chance now the price tend to support that line. So the earlier resistance line can now turn into a support line. So some retail traders consider it as a breakout and will buy in these points where when the price comes back to the earlier resistance line because now they consider it as a support line. Okay, let's see what's next. Okay, so now let's look at the importance of using higher time frame support and resistance lines. And the secret to why SNR is not working for some traders. You can draw support and resistance on any time frame, like you can draw it on monthly or weekly or daily charts, or you can draw them on 1 hour, like say 4 hour, 1 hour, 15 minute, 5 minute, 2 minutes. You can draw it on any time frame. However, it's very important that you use the higher time frame support and resistance lines because they tend to be more reliable. So when it comes to making your trade decisions, it's advisable and it's important that you draw the support and resistance on monthly, weekly and daily charts and consider those as your support and resistance. 4 hour is also okay, however, these are the most important ones. So, now the secret to why support and resistance is not working for some traders, that's because they sometimes use lower time frame support and resistance lines. Now the problem of these lower time frame support and resistance lines is they tend to be less reliable, meaning they work sometimes and they may not work on many instances, meaning the price may not respect these lower time frame support and resistance lines in many instances compared to higher time frame support and resistance. So it's better not to use the lower time frame support and resistance, and it's better to use higher time frame support and resistance lines when you make your trade decisions. The lower time frame SNL support and resistance lines are 1 hour, 15 minute or anything below that. So what you have to keep in mind is even sometimes higher time frame support and resistance lines may not be respected. However, compared to lower time frames, the higher time frame support and resistance lines are respected more than the lower time frame support and resistance lines. So this is the secret why support and resistance is not working for some traders, because they draw them in both higher time frame and lower time frame, and they use lower time frames also for their major trade decisions. So now you know that you better use the higher time frame for major trade decisions. So let's see what's next.
Okay, so now let's look at the concept of support and resistance are not lines but being zones.
What does that mean? So as you can see, when you draw, let's say this is a resistance line. So when you draw that line, you can see on some instances the price will go above it, like break the resistance and come back. See, it goes slightly above it over here and come back. Over here also same, and over here also same, over here also same. So what that means is when you draw a support line or resistance line, in this case the resistance line, keep in mind that you have to give some buffer for the price to go slightly up or down around the support and resistance line. So when you mark it with, let's say, with this ash color box, then you call that as your resistance zone. So you use the resistance zone and but not the resistance line. So keep that in mind, which is very important. Okay, let's see what's next.
Okay, so now let's look at some real chart examples.
Okay, so you click the trend line from the toolbox and click near the body, click, and if you just drag it from the mouse, the line is not straight, drawn, not drawn. So you click the shift key from the keyboard, so then the line is drawn straight. So when you draw this is an example for a daily resistance line where you can see the price has respected that over there. So there is a possibility for a sell entry, and some retail traders use this alone and take some sell entries. Okay, let's look at another example. Okay, this is another example in the daily chart. So you can see the price is respecting this area. So if you click the trend line and press the shift key and draw, you can see this acts as a support line. So some retail traders will enter into buy entries over these areas. They take buy trades. Okay, let's look at another example. Okay, so this is the daily chart again. you can see over here, see this line is acting as a resistance line. So multiple times it's acting as resistance. So the retail traders can take a sell entry here, and a sell entry and make profits. However, you can see after some time the resistance can be broken. So this is a breakout happening over here. So once the breakout happens, you can see now that resistance line over here is now acting as a support line. See, the price is respecting and the price is now going above up. It's taking this as a support line. Then you can see this part, that's what we said, these are not lines, these are zones. So you have to give some buffer allowance for the price to go up or down slightly. However, you can see this resistance line is now acting as a support. Okay, let's look at another example. Okay, so this is another example in the daily chart over here. So this price line is acting as support. So some retail traders can buy here, will buy here, and they will buy here as well. However, after a while, the support can be broken down. So this is a breakout, as we mentioned, and once the breakout happens, then this support line now will act as a resistance. Okay, let's look what's next. Okay, so this is a 1 hour chart where you can see this price point is acting as a resistance. And let's see another one. And over here, you can see this line is acting as support. So some sell entries can be made in these places and some buy entries can be done in these places. Now, however, this is because this is a 1 hour chart, these 1 hour support and resistance lines are not considered to be major support and resistance lines to take major trade decisions, but these are minor SNR lines. And you will see in future lessons, we will show you how to use the minor lines as well within a trade. Okay, let's see what's next. So as mentioned, these support and resistance lines are zones. So if you take the box rectangle tool, when you draw a support resistance line, you have to give some allowance for the price to go up or down. So we call this as a support and resistance zone. You will see in future lessons, we will use them for trade decisions. So this area is you mark it like this, so that you mark it as a support and resistance zone. So it's not a line, it's a zone, it's an area. And after a while, you can see this line can be broken. So then it's a breakout happening over here. Okay, let's see what's next. So similar to that, you can draw SNR lines, support and resistance lines in 15 minute, 5 minute as well. So the lower level ones are used within while you are in a trade. So in future lessons, we will show you how to use the major support and resistance lines and the minor lower time frame support and resistance lines as well. Okay, let's see what's next.
Okay, so now let's look at how retail traders view support and resistance versus how big banks and smart money view support and resistance. Okay, so retail traders believe that support lines will hold. So they believe these support lines will hold and they tend to take buy entries as discussed earlier. So they are entering into buy trades at these support lines. But then due to this, when they enter into buy entries, they will put their stop loss entries below the support line. That is how you enter into trades. You will see it in future videos. We will show it to you. So when they put their stop losses here, they are sell stops. Again, don't worry why they are sell stops. We will have practical videos in future. So when retail traders buy at these locations, and when they put their stop losses, which are sell stops, smart money knows about this. So these sell stops are going to be liquidity for big banks and smart money. So what that means is, smart money will view the support lines as liquidity because they know the retail trader stop losses are below these support lines. So what smart money and big banks will do and the algorithm will do is, it will push the price down at support lines. See, this is what's happening here. The price has been pushed down and then again taken up. So when the price is put down like this at support lines, when the stop losses triggers, which means when the sell stops triggers, what big banks and smart money will do now is, after putting the price down in these areas in large quantities, they will start buying these sell stops. And after that, they will push the price up. So this is what you call as a fake out. So this is known as smart money hunting for stop losses. So this is a stop loss hunt. We call it as a liquidity hunt or liquidity sweep. Okay, so now let's look at what happens at resistance lines. So again, retail traders believe these resistance lines will hold, as we discussed earlier, and they tend to take sell entries. So retail traders will sell in these resistance areas. So due to this, they put their stop loss entries. When they sell, they have to put a stop loss entry. They put it above the resistance lines. So these stop losses are buy stops. Now again, don't worry if you can't understand what are buy stops, but just get the concept in this video, and we will discuss this practically with trade examples in future videos. But for now, understand retail trader stop loss entries are above resistance line, which are buy stops. Then these buy stops are liquidity for smart money. What that means is smart money will view this resistance line as liquidity. What that means is smart money and big banks and basically the algorithm will push the price up at resistance line. So as you can see in this resistance line, see the price has been pushed up a wick. That's how a wick is being made. So algorithm will push the price up, and then it gives the opportunity for smart money and big banks to sell in large quantities for these buy stops. Smart money will sell at these locations because for them to sell, they need buy entries. Then these stop losses are buy stops. So that is where smart money can sell in large quantities. And after that, they will take the price down. Algorithm will take the price down, allowing smart money to make profits. So when this happens, this is what we call as a fake out. So this is a fake out, this is a fake out. So basically, what smart money and big banks does here is they are hunting for these stop losses. So the stop loss is hunted. We call it as a liquidity hunt or liquidity sweep. So this will be discussed further practically with trade examples in future videos. So for now, in this video, don't worry about liquidity. So we gave you here the overall idea of how retail traders looks at support resistance lines versus how big banks and smart money view at support and resistance lines. Simply the idea is for big banks and smart money, these support and resistance lines are full of liquidity. So what they do is they make a fake out and they grab the liquidity, and then only they will take the price in the intended direction. And what I mean is at support, yes, the price needs to go up. However, they first grab liquidity and then they will take the price up. So that is the key point what you have to understand, and that is why when we draw support and resistance lines, we said make it a zone so that you give a buffer for that liquidity hunt as well. So these things will be practically discussed in future videos. So make sure to subscribe to the channel so that you don't miss those future videos. Same thing at resistance, the price needs to go down. However, as we explained, what the algorithm, big bank and smart money do is it will make a fake out and grab the liquidity, and then only after that they will take the price down because they need that liquidity in order for them to sell in large quantities. Okay, so that gives you a clear idea of how smart money and big banks look at support and resistance lines.
Okay, so in future lessons, we will show you how to use this information with practical trade examples. So that is the end of the section.